Good morning, everybody. Good afternoon to those in the UK. Thank you for joining us. My name is Matthew Melling. I'm part of the UK's Department for International Trade, based out of the British Consulate in Los Angeles. A big part of my role is supporting US companies looking to expand and grow their international footprint into the UK. And we do that through free and confidential services and work with partners like RSM. And I'm delighted to introduce RSM, a global accounting firm that I've had the pleasure of working with across a number of projects in the last 4 years, a statement that can probably be said by a number of officers in the network. I'm particularly delighted to introduce this session as it takes me back to when I first came out to the US over a decade ago, and I was looking to set up my business here. And I was faced with this array of new and different and sometimes slightly opaque regulations that then miraculously changed from major city to major city as I crossed state lines. And I spent a lot of time, I wasted a lot of time really, trying to figure that out when I probably should have just paid somebody. But when I did reach out to them, I was sort of struck by how incredibly expensive and it was to sort of navigate through that complexity, which makes sense. So part of the session that I'm hoping to achieve here is just to demystify the process. A lot of the work that I've done, particularly with Sam and Mike here in the US with clients, is just demystify that initial process and the initial sort of guide through establishing a presence in the UK. And the other part of that is actually putting a price on it. So within this scenario, they're going to talk about how much it will cost to do that, which is, you know, I'm quite impressed by. It's very hard to get service providers to sort of put their finger on a price while you're talking to them. Now, that is just one scenario, and it's not going to represent everyone's. But, you know, I think it demonstrates the value that they offer and the confidence in that value that they're going to do that. And then in this virtual world, I'm keen to see how much I can, as a US business owner in this case, how much I can just push off, how much I can just place on RSM's shoulders for them to take care of. You know, while we're unable or unwilling to travel, I still want to be able to grow my business, and I want to be able to focus on that. I want to focus on my product, and I want to focus on my sales. And how much of that rest of it can you take care of without me being present? Now, ultimately, I actually didn't register in the US. I registered just in name only and contracted with my company in the UK and worked with the development team there. And I found it quite productive to do that. I enjoyed that time, you know, waking up in the morning, checking in with my team, seeing what got achieved the day before, discussing what needed to be done the next day or two, and taking away my actions for that. And I've always thought, while I've been in this role, that that's quite a good way of working. I found it very productive. Now, when I was doing that, at least I don't think, the R&D tax credits weren't available, and if they were, I was a bit of a fool for missing out on them. Now, there's something we talk about a lot with clients, but often when they get put into practice, it's further down the line with partners like RSM. So I don't actually get to see them, get to see the numbers very much. So I know we're going to touch on that a little bit at the end too. I'm excited to do that. But as a whole, you know, I do think if that's every US entrepreneur's experience of setting up in the US, they must be thinking, it must be quite a psychological hurdle to get over to understand how to do it in Europe, where, you know, there's a bit of reputation for extra regulation, but in the UK, that's perhaps a little unfair, but I'm hoping we can demystify that a bit more with you. So I just want to say a quick thanks to sort of the team, Simone, Bethan, Emma, Duncan, Sim, Cathryn, Sam, and of course Mike for putting this together. And I will hand over to this team of experts to talk now, which I probably should have done a couple of minutes ago. And I'll start by introducing Mike Sables, who's a partner at RSM UK and head of the FDI desk. And I just want to say, I'll stick around to navigate any questions. Please put them in the chat. But thank you to Mike and the team, and over to you.
Thanks, Matt. I'm Mike Sables, partner with RSM UK. So the idea of today's presentation is to give you an indication of the costs to set up a remote team in the UK. To do that in the time available, we're going to talk you through a very specific example. Of course, if we were working with you, we would give you a bespoke, tailored proposal and advice. So as you can see from this slide, RSM has an extensive global reach and can support you at any stage of your growth. But today we are focusing on just setting up in the UK for the first time. So the team presenting today specialise in this and with working with companies from their very first international employee. So let the team introduce themselves as they deliver their slides. All of the team are part of the foreign direct investment team working with companies as they expand internationally. For myself, I've been working with US companies for the last 20 years and visiting the US on and off during that period. I missed out on our secondment program around the globe, but Sam and Duncan have both spent time living in the US in San Francisco and New York, respectively. So with that, I'll hand you over to Sam.
Perfect, thanks Mike. Hi, I'm Sam Day and I'm a director in the team with Mike working on foreign direct investment, so US companies setting up in the UK. As Mike mentioned, I was very lucky to spend 6 months over in San Francisco covering California, helping US businesses do exactly that. So before we go into the detail as to kind of the costs for setting up in the UK, we're going to just quickly set the assumptions. This won't necessarily fit your exact model, but we can answer specific questions at the end if you need to. So we have assumed that you are obviously a US business and you're going to set up a UK entity and that you're in the technology sector. We've assumed that your UK entity won't trade directly with third-party customers in the UK, that you'll remain that with the US business. So the UK will trade via a cost-plus intercompany basis. We've assumed you'll have 5 direct employees in the UK, not through a PEO, and that you'll offer those employees stock options. For simplicity, we've assumed they will start on the 1st of January and your financial year end is 12/31. We've assumed there's going to be no expats coming over to the UK, but we can answer specific questions if you have those at the end. And we've assumed that you've got a global ERP system like NetSuite in place, and that you're not yet large enough to require a UK audit or have over 250 employees globally, so won't need transfer pricing initially in the UK. So what we're going to do, next slide please, is Mike's going to talk through just the general setup items in terms of the actual entity getting that up and running. Cathryn is then going to talk through hiring and getting your employees set up. I'm then going to talk through the ongoing accounting, payroll and VAT requirements, and then Duncan is going to end with your year-end compliance. So back to you please, Mike.
Thanks, Sam. So this slide covers the setup, getting you up and running, forming an entity, a C Corp equivalent, we're assuming, and getting all of the necessary tax registrations done. The big ticket item as part of this is the intercompany agreement. So typically, as Sam says, the only sales contract that the UK company will sign, providing services to the parent. Within that, we've included the cost of a lawyer drafting that agreement for you because RSM won't do this, but RSM will review it from a tax perspective to make sure it's tax efficient. So the costs there around $10,000 to get all of that done. Then the GDPR point, this was the necessary arrangements for transferring your employees' data, personal data, outside of the EU, so typically from the EU to the US. Again, this isn't something that RSM will do, but we spoke with our friends at Field Fisher, an international law firm with offices in Palo Alto, and that's the figure that they gave us for drafting agreements to cover off those requirements. Now, it may be that your in-house counsel, if you have one, or your external counsel can cover this off as part of the rest of the work that they're doing for you on this area, so this may not be a required cost, and therefore we're talking about this as an optional cost as part of this presentation. So now over to Cathryn to talk about the employee side of things.
Thanks, Mike. I'm Cathryn Cook. I'm a senior HR consultant. I advise clients on their employment obligations when setting up in the UK, and I work closely with Mike and Sam and the FDI team. I'm just going to briefly cover the key requirements for employment setup in the UK. So the employment contract. Every employee is required to have a UK legally compliant employment contract by their first day of work. This must include details such as hours of work, remuneration, place of work, notice, holiday entitlement and sickness benefit. You can offer enhanced entitlements in line with best practice approach in your industry or in your wider company, but you'd still need to be mindful of legal minimums. Unlike the US, a UK contract is never at will, so both employer and employee need to make sure they're bound by what's included in it. To support the contract, you can have a staff handbook, although it's not mandatory, and depending on the size of the company that you're setting up, it might not be viable to have such a large document. But you are required to have basic policies on equal opportunities, health and safety, equality and diversity, and disciplinary and grievance. Payroll setup and PAYE registration. So you need to set up a payroll to make sure you pay your employees correctly and you calculate the applicable tax and social security withholdings for both you and your employees. You'll need to register with the UK tax authorities, HM Revenue and Customs, for pay as you earn, called PAYE. And each employer is given a unique identifier code which will need to be included when submitting pay data to HMRC. Most employers use an automated electronic payment system which allows direct payment of salaries and payroll taxes directly from the company UK bank account. Travel and expenses policy. So it's the employer's responsibility to ensure that only tax deductible expenses are paid without being reported on P11D forms, W2 equivalents for the US. All employers have to self-police the expenses they reimburse to employees and determine whether any are taxable and therefore reportable either on P11Ds or through the payroll. Whilst not mandatory, it's advisable to have a comprehensive tax and expenses policies in place to ensure that you follow the correct procedures and processes, and as well as ensuring that you've got correct treatment of per diems and other expense types. Pension, so that's similar to 401k schemes. All employers, regardless of size or number of employees, are required to set up a workplace pension scheme in which all employees are automatically enrolled and where both employer and employee are required to make minimum levels of contributions, currently 3% for employer and 5% employee. Healthcare. As the UK has a state-funded National Health Service, there's no legal requirement for people to have medical insurance. But a lot of employers offer company benefits such as private medical insurance or PMI as a benefit to employee, although it is taxable. But it doesn't give any enhanced levels of emergency treatment, and it tends to be used for more things like planned operations. Workers' comp. In the UK, this is called employer's liability insurance. It's a mandatory requirement to have in place, even if you don't necessarily have an office space. Briefly about stock options. If you want to offer these for UK employees, they need to be registered with HMRC, and these will be discussed in more detail a bit later on. As you can see, based on our assumptions, the total estimated cost for that would be around $8,000, with RSM able to support you in many of these areas. So just briefly covering off your approximate employer-related costs. Base salary, obviously that's open-ended, but typically $60,000 to $130,000 as an average. Commission and bonus, that's open-ended, it's not contractual, so you can set whatever scheme up you want and it's variable. Pension, as mentioned before, that's 3% employer contribution on the basic salary. PMI, again, that's usually an annual premium, but estimate is about 3% on a basic salary, around $3,000 as an average. Social Security, called National Insurance for the UK, 13.8% that you need to pay as an employer on your basic salary and any commission and bonus. Finally, workers' comp, again, typically about £1,000, but depending on the type of policy that you have. So Sam will now talk more about the ongoing accounting, payroll, VAT.
Thank you. So once the entity's formed and you've done all of those setup items and you actually have your employees started, you'll need to obviously run them a payroll. So in the UK, payroll is typically only run once a month rather than twice that's in the US. And payday can be whatever you want it to be, but it is typically towards the end of the month. Then you'll need to think about your ongoing bookkeeping and accounting. Who's going to do this? So we've assumed that you have a global ERP system, and that is because you will typically need to have your UK books and records kept in GBP. That's for your year-end compliance that Duncan will explain, but also for VAT. So we've assumed you're going to register for VAT, but this is just voluntary, you don't have to. The reason to register for VAT in this scenario would be to reclaim any of the VAT that you have incurred from your suppliers, for example, RSM, accounting firms, and legal firms, and employee expenses. So the VAT returns need to be submitted on a quarterly basis so that you can get those refunds back, which means that you need to keep your bookkeeping going on a monthly basis in GBP, and then someone will need to go through the VAT and decide if you can or can't claim it. You can't just assume that everything that you're charged from VAT you can reclaim, unfortunately. So next, you'll need to think about your benefits administration. So Cathryn mentioned pension and the private medical. Someone will need to do those filings on a monthly and annual basis. You will then need to do your year-end payroll filings, which is part of the payroll service, and then the W-2s or the Form P11Ds that are those taxable benefits that need to be reported to HMRC. We've mentioned here making tax digital. So this is a new requirement in the UK. When you file your VAT returns, you must file them digitally. And that is so that the original records are filed straight through to HMRC and they can see the detail. So you need to make sure that whatever system you're using for the accounting has this making tax digital requirement in place. If not, companies like RSM, we can provide our in-house solution, which has a license fee. So all of those services RSM can assist you with if required. There'll also be the employer stock option filing. If you do offer stock options to your employees, HMRC need to be notified once a year. So based on all of this, assuming you outsource to a firm like RSM, the estimated annual cost based on the 5 employees that we set in the scenario is $28,000 US. Okay, now over to Duncan, who's going to chat through the year-end requirements.
Thanks, Sam. Hi, everyone. I'm Duncan Beckwith. I'm a director in the corporate tax team for RSM UK. As Mike mentioned at the start, I spent a bit of time working in New York, 9 months precisely, on the UK tax desk, speaking to companies like yourself on expansion into the UK and explaining many of these topics. So once you have the UK limited company set up and you've gone through all the steps that Cathryn, Mike and Sam have mentioned, you come to the annual compliance. And annual compliance is split into what we've said as 3 categories: statutory financial statements, corporate income tax return, and the ad hoc company's house filing requirements. I'm also going to talk to you about the R&D tax credit regime and how you may benefit from this based on the assumptions we've made. So starting with the statutory financial statements, so unlike in the US, a UK limited company is required to prepare and file with Companies House a set of financial statements for its accounting period. Typically that is 12 months, i.e. from 1st of January to the end of December, but can be extended up to 18 months. Financial statements must be prepared in accordance with UK GAAP or International Accounting Standards. I know from the Q&A already that, Brian, thank you for the question, what triggers needing a UK audit? So the UK financial statements will need to be audited where 2 of the following thresholds are met or breached. That's 50 employees, around $12 million of turnover, and around $6 million of balance sheet gross assets. Now these tests are applied on a consolidated basis, so taking into account the worldwide group, i.e. your US parent company and your UK subsidiary. So once you've prepared the financial statements, they're required to be submitted to Companies House, and they must be submitted within 9 months of the end of the accounting period. So for a 31 December year end, the accounts must be submitted to Companies House by the 30th of September following the year end. Moving on to the corporate income tax return. So the basis for the corporate income tax return is those financial statements. And there are obvious tax adjustments made from profit per accounts to taxable profits. And some of those you'll be familiar with, such as client entertaining and tax depreciation. Once you've made the tax adjustments, you'll have a taxable profit, which is subject to tax in the UK at a rate of 19%. Tax is due 9 months and 1 day after the end of the accounting period. So again, for a 31 December year end, tax would be due and payable by the 1st of October the following year. Filing of the corporate income tax return is due 12 months after the year end. Again, for a 31 December year end, the tax return will be due the following 31st of December. I also mentioned some Companies House filing requirements. So a UK limited company is required to file an annual confirmation statement with Companies House, which includes details of the persons of significant control register, which typically includes those individuals with ultimate beneficial ownership of more than 25% in the UK company. As I previously noted, any information filed with the Companies House, whether that is the annual financial statements or the Persons of Significant Control Register, are made publicly available. We would typically expect our costs for those compliance obligations to be around $7,000. And as we'll show in the next slide, those fees aren't typically payable until Q2 of the second year of activity in the UK. So moving on to the R&D, we're working on the basis that all 5 employees are engaged in eligible R&D activity. And we don't have enough time on this webinar to go through what qualifies as R&D. But if we assume that each employee is paid $100,000 and therefore the UK company incurs $500,000 of eligible R&D expenditure, the UK R&D regime allows for enhanced 130% deduction. Therefore, for every $100 spent, a deduction can be claimed for $230. Where the enhanced deduction pushes the UK company into a loss position, i.e. it would have carried forward NOLs, the UK Tax Authority allows for a surrender of those losses for a repayable cash credit at 14.5%. That repayable credit is not dependent on previous tax payments made, and therefore we would estimate that a company with 5 employees solely focused on R&D, the company could reclaim up to $150,000 in repayable tax credits. I'm sure you'll agree that's a generous regime in the UK. So I'm going to pass back to Mike, who's going to talk you through some common considerations.
Thanks, Duncan. So we mentioned stock options earlier. So, I mean, you can grant these straight out of the US plan. That's fine. They will be non-qualifying options in the UK, regardless of status in the US. Or you could put a wrapper around them by way of a UK sub-plan, and that would tax advantage them in the UK. The reason that you would consider this is that it may reduce the employee tax down from 60% to potentially 10%. So that's quite a saving for the employees. The quid pro quo, as we say, is that we would suggest you don't grant them as many options and you save some options for the pool. So that's something that's good for the company. Other things just to pick up on, Duncan mentioned audit. Transfer pricing, that's not something that you typically look at on day one, but as you grow, that is something that you'll have to give consideration to. Brexit, we can discuss this on a one-to-one basis if you wish. In the scenario that we've run through today, there's hardly any impact from Brexit, so nothing to pick up on there. Costs mentioned, that's looking at a recent WeWork contract in central London, so that's $1,000 per person, per desk, per month that we're looking at there. Sam, I think it's up to you to summarise.
Yeah, perfect. So if we add up everything that we've put on the slides before, this is assuming professional fees. If in year 1 you do all of those setup items, that's a total of $18,000 US. The ongoing costs of what I mentioned in terms of the ongoing bookkeeping, payroll, and VAT requirements, that's $28,000 US. You then get to year 2, and the setup items hopefully will fall away. You've done everything. And then the reason that the year 2 fees will jump, and that's because of the year-end compliance that Duncan mentioned, that relate to year 1 will not be billable until year 2, because that's when you need to do those filings. So these figures have excluded that GDPR that Mike mentioned and the additional tax advantageous stock option subplan that you can put in place. And also, obviously, the R&D tax credit we've excluded as well, as that's just part of your P&L. So next slide. This is a quick summary of who we are in case you wanted to contact us with any specific questions. But what we can do now is go back to Matt to ask us any Q&A questions that have come out that haven't yet been covered. If we can just close the slides, and then you should all be able to see our faces.
Great, thank you, Sam. Yeah, a couple of questions coming over the chat and the email. What if we want to send US employees to the UK? What are the current requirements?
Happy to answer that one if you like. So companies will need to apply for a sponsorship license in the first instance before they even get anybody over to the UK. So that's a process that they need to go through, and then issue a visa if they're a non-EU or UK citizen. This process can take a good 2 to 3 months, possibly longer. And again, this needs to be in place before day one of employment. This is not something that RSM offer, but we work closely with third-party immigration specialists and can introduce people if necessary.
That's great. Thank you. Yeah, we certainly know a few other immigration specialists too. Another one I got was, how common is it for UK? Oh, we did jump in.
Matt. Yeah, I just want to add to that. A common mistake that we come across is people assuming that employees sent from the US to the UK will stay on the US payroll and not go on to the UK payroll. So when somebody is living and working in the UK payroll taxes will be required, apart from very exceptional circumstances. So it can be worked that they do stay on the US payroll as well, and we transfer costs between the two, but there will be a requirement to pay taxes in the UK as somebody comes into the UK. Sorry, just wanted to add that one in.
No, yeah, that's a great point. I definitely have run into that as well, so that's good to flag. I got a question about how common is it for UK companies to offer stock options. I've heard it's not that common as it is in the US. Is that still the case? What are you experiencing?
I'll jump in first on that one then. So for virtually all of our US-owned tech clients expanding into the UK, I think it's almost expected now that it will be part of their remuneration package that they will be given options in the US company. If we were talking about a UK owner-managed business, then yes, I agree. Stock options are not very common, but for internationally owned corporates, I think it's very much expected to be part of the package.
Certainly makes the US companies stand out in the employment market as well. Should an employee not work out, how easy is it to terminate them? I think it's a common fear I run into when I'm talking to US companies. Anyone want to pick that one up?
I'll pick that one up. And as I said, because UK contracts are not at will, it's not quite as straightforward. Rather than going into great long complexities, it does depend on length of service. Most people start off with a trial period of up to 3 months, where termination can be a lot quicker with 1 week's notice. After that, it can be more complex depending on the reason for termination, various scenarios. After 2 years service is the cutoff when they start to get more legal, and you have a risk of an unfair dismissal legal claim, so you have to be more careful about the process that you follow. Again, we can support on that without going into great detail of each and every possible scenario.
Thank you, Cathryn. And as part of that scenario, was that sort of the idea of that being kind of included, the sort of base level HR support?
Yeah, absolutely. We can provide that ongoing HR advice and guidance to companies. So once we've got through that initial setup, we can work with them on an ongoing basis as they bring more people on board, start to manage their staff, and work through the whole employee life cycle process with them.
That's great, thank you. And I'll ask one question that I doesn't always get asked, but I sort of preemptively bring this one up now just because it does take a bit longer than it should. What's the deal with UK bank accounts? See how you
I'll take that one, as that's the bane of my life. Getting a UK bank account takes a long time, is probably the best way to say that. It shouldn't be that difficult, but in the UK, the banks like to know everything about your company and who owns your company. So if you have any one person, a corporate or a trust or anything that owns 10% or more of the business in the US, the bank will want to know information about them. Then they'll need ID docs, they'll need to be certified. There are always many, many forms to complete, and most of them don't even know what the questions are asking. So it takes a while to even gather the information. Then you submit it to the bank. They obviously have to go through their KYC process. That will take some time, might be some flags that kind of come up, and so they go backwards and forwards. We say leave at least 3 months to get the bank account set up. You can't start that process until you've got your entity, but you can hire people without a bank account. Technically, pension should be paid by direct debit from a UK bank account, but there's ways to get around that in the short term. You can pay it from the US. So I'd say get started ASAP, but you don't need to kind of halt all plans just because you don't have a bank account. But it is important to get through to the right person in the banks. So if you work with a bank in the US, let's say Silicon Valley Bank, best place to start is to talk to them, find out if they can help you, which they should be able to because they have a UK branch, and then that will be a quicker process. If you just go online and kind of go to a local UK bank and just start filling out a form, you won't be put through to the right person, and it will take even longer. So we know a lot of the banks who've been doing this long enough now that we can make introductions where required.
Yeah, that's great. Thank you, Sam. Yeah, it's important to get that one going. I sort of flagged that now earlier rather than later. But it's fair to say that it's a similar experience across Europe. The know your customer laws, anti-money laundering laws are slightly more fierce in this part of the world. And then generally, 3 months to get a bank account. How long should we expect? Perhaps excluding that, maybe, I don't know. But how long should we expect to just from start to finish, if everything goes to plan or close to plan? What time frame will we be looking at to get going in the UK?
So to actually form a UK entity, assuming that you're going down the subsidiary route, the actual filing takes 24 hours. So let's just say a week, just so that you can engage with your service provider like RSM and gather all the information. But the actual filing is very quick. Payroll registration, Cathryn, correct me if I'm wrong, probably about a week is about right. Employment contract could probably be done in a week.
Yeah,
as well.
Yeah, that can be done very quickly as well. Yeah.
And then all the other kind of registrations could be done in a matter of weeks. The VAT isn't urgent. The corporation tax registration will be done in the first 3 months. So the only things that really will take the time is the bank account. But as I say, I wouldn't hold up your entire process just because of it. But if you're able to plan ahead and say, I'm going to hire in January, let's get started on the planning now, then that's probably the best way to do it.
Thank you, Sam. Yeah. And we got another one coming on the chat, actually. How big of a deal are personal taxes for a US citizen working in the UK? Assuming they are renting a home and perhaps investments that produce income in the US, can an employee do their own taxes, or do they need an accountant?
Do you want me to take this one? Sure. So a US citizen will be subject to tax on their worldwide income wherever they live. That's kind of the basic start. To the extent that they are working in the UK, as Mike said, they will need to be included on the UK payroll and will probably be subject to UK taxes. Now, there may be a mechanism for claiming what we call double tax relief or making use of a foreign earnings exemption in the US. The foreign earnings exemption, I can't remember exactly what the threshold is, but it's around $100,000. The foreign earnings which potentially are exempt from US taxes. With regards to renting a home and producing investment income, so depending on how a person is seconded into the UK or how a person moves over to the UK would depend on how that is taxed. A lot of companies structure the movement of employees from the US to the UK via secondment, which allows for certain reliefs in the UK, one being detached duty relief, which allows for a UK tax deduction for things like renting a home, various commuting and travel and subsistence costs. So it could be structured in quite a tax efficient way in which the income may fall from within an exemption in the US and also meet an exemption in the UK. But I think the starting basis is to say you'll continue to pay tax in the US, you'll be subject to tax in the UK, and it's always best to engage with an accounts firm like RSM who can kind of talk you through that process. It's I know in the US, having lived there, that it's very common for individuals to use the likes of HR Block to do their own UK tax return. That process is less common in the UK, and most individuals who are required to file UK tax returns will engage a professional services firm like RSM. Hopefully that answers your question.
And of course, if we want to get in any more detail on specifics with any of these questions, or if anyone has any questions they weren't sort of willing to share publicly, everyone's emails will be on that last slide. But and of course, we'll be available anytime you need us. So I think I was handing over to Mike just to say a few words to close us out. But thank you everyone for participating, and thanks to RSM for their expertise.
Thanks, Matt. I was mainly saying thank you very much to you and DIT for arranging this as part of London Tech Week, giving us the opportunity to put this together. This is an area that we work on day in, day out, and some of us have been working in it a very long time and do quite enjoy it. So we'd be delighted to help anybody who has any further questions. Thank you to everybody who's dialed in and listened, and especially those of you who've listened right the way to the end. That's very unusual actually for people listening to me, so thank you very much for that. Yeah, contact details, if you didn't get them off the slides, then Matt or through the WebEx you should be able to get in touch with us. We'd be happy to have a chat, answer any questions that you still have. And I think there we're done.